I am very conscious of the fact that this is not a 20-year play for me or not a 10-year play for me, right?
Using data to buy properties is obviously really, really smart. Like otherwise you're just going to buy the house next to you or in and around you. So
it takes a certain level of experience and skills to be able to do this job.
That is the definition.
That is the word that came to my head.
That is the definition of Ponzi. Data-driven buyers agents are all the craze at the moment. There has been such a big rise in this industry. It is crazy. Where there was once a few, there are now hundreds, if not thousands. Where there were once people who buy 1 or 2 properties a month, there are now people who buy 50, 100 properties a month, with big scale buyers agents completely dominating markets and buying entire suburbs. Yes, you heard that right. Buying entire suburbs and saying, I'll have it all. That is happening right now. And today we are going to talk about the rise of social media, of technology, with a buyer's agent who uses data himself and is a whiz and is kindly enough open to talking about this and having a real conversation about a potential change in property investing and market dynamics that I think exists. Adi, what do you think? You going to hate me for this one?
No, I love this topic, to be honest.
Really?
Yeah, absolutely. Okay. It's funny. I was thinking about I saw a LinkedIn post from you where you said you were in a room and 6 different people told you, they're data-driven buyers agents.
Yes.
And I was like, gosh, if I was in the room, you would have met 7 of them. And I'm guilty of this, right?
Yes,
I'm guilty of this in my sales calls. I'm a data-driven buyers agent.
Yes.
And you know what's stopped me in the last few months saying that? 1, it's you.
Oh, yikes.
And 2 is because people have outright told me I heard that from the same spiel from another person or another 2 people. And I was like, oh gosh, that's embarrassing.
Yes.
So it dawned on me that I was leaning into this almost craze of data-driven buyers agencies.
Yes.
When I have been an investor for like 10, 11 years, yes, of course I'd use data, but I understand property probably at a deeper level than most of the buyers agents that I've met.
You do, for sure. Yeah.
Because they haven't built the portfolios and et cetera in the background. So I think it's an interesting topic. I think because one of my things is one of the barriers to entry, right? I'm probably going to get a lot of hate for this. The barriers to entry into this space is way too low.
Yes.
Okay. People are coming in droves because they're being promised, $10, $20, $30,000, a month of income, but they're not realizing that it takes a certain level of experience and skills to be able to do this job.
Yes.
But it's very easy to
become it, yes.
Because you could do a couple of courses and you tell yourself you're a data-driven buyer's agent. You've never bought a property for yourself in the past, nor anyone else, but now you're buying it in bulk, 10, 15, 20. So I think there is definitely a prevalence of this, but I do believe that in 2 to 3 years, maybe longer, maybe a little bit shorter, there's going to be a washout. I think a lot of these people are not going to.
We're in the laundry machine at the moment.
I think so, man. I think so.
Makes a bit of sense, actually.
I don't think everyone's going to last. I think there's going to be differentiations you need to put into your sort of spiel beyond just I'm data-driven. Yes. Everyone knows stock on market. Everyone knows days on market. Yes. Everyone knows vacancy rates.
Yep.
That doesn't make you special. What makes you special? And, I've
love
met
that question.
What makes you special, man? I've met some of the cookie cutter.
Adi.
Yeah.
What makes you special?
What makes me special? I think my experience. I think I'm going to lean into that.
100%.
I have done this. I've lived the life of a property investor.
Let me add to that.
Sure.
Everyone, if you're watching this episode and you have not watched part 1 of this series about Adi and his story, go back, listen to it, get your notepad out and listen to it, because Adi is one of the best property investors I have ever met. That is a very fair statement to say. I've met thousands of property investors. I've talked about it for a decade with so many people in so many walks of different environments, different states. I've learned so much from so many people. You are one of the best property investors I've met. And that does make you special to me, but I wanted to hear it from you. What makes you special? Your story does make you special, Adi. Your experience does. You keep going.
No, to me, you gotta live the talk, So, for example, I'll give you an example. I did buy a PPOR at one stage.
Yes,
didn't do a great job of it, right? But by my measures, I don't buy PPORs for other people because I'm like, I don't have the skill set for this. Yes. I've made a very conscious choice. Lots of people have asked me, they're like, hey, go and buy, can you please help me buy a home? And I said, no, I don't have the skills for it. Very upfront about it. Because again, going back to the data-driven thing, I think you need to have a differentiation beyond just 20 pieces of data that you learned in a course. I think there's more to property than that. It's understanding it at a friend of mine, shout out to JP, he calls it at a molecular level, understanding property at a much deeper level than that. So I think you need to differentiate yourself. I've met property investors, someone, Oliver Chung, he's a good friend of mine. He's the founder of Incyto Buyers Agency. He's got an architectural background. So one of his huge selling points is he understands design really well. So his niche in the market, he brings in this extra layer of expertise that I don't have. I know I certainly don't have.
Yes.
He can see a property. He can see where, the best ways to maximize profit is. That's fantastic. Then I have Dineth from, D36 Property. Again, one of his niches is he renovates properties for his profit. And that's it's an extra layer of expertise because he's done it himself. Oliver's got a beautiful portfolio of him, himself. So
that's one way to protect yourself. So I'm thinking about the person who just wants to invest and wants to hire a buyer's agent and wants to be nationwide, wants to invest Australia-wide. So for that person, one way to protect themselves in this world where there's so much choice now, where everyone has a very similar skill, is the thing that I find is, have you done this yourself, and can you show some track record?
Correct.
Is that fair to say?
100%. I think so.
Sure.
And the track record for me has to be your own property investment journey. It has to be. I think it's what sort of sets you apart from the general populace.
Yes.
I can genuinely say not a lot of people around me have built what Rona and I have built.
Yes.
So I can lean into that. I'm very upfront about sort of my portfolio when client calls happen, and I send them addresses. I was like, if you need the track record,
take a look.
I'm happy to have a look. You'll see my name on the on the property title or whatever it is. So I'm very transparent with that because I think people should have that level of sort of visibility into what you have done for yourself, so you can do the same for me. So
let's talk about the issue here though.
Sure.
Using data to buy properties is obviously really, really smart. Otherwise you're just going to buy the house next to you or in and around you. So let's just start there. And again, the preface that we've made in the other episodes about this is people are making better financial decisions by using data today, and that's demonstratedly proven by the results that they have versus, say, I invested in Sydney in 2021 versus I invested in a whole range of other markets that have done much, much better. And data will have pointed you to not buy in Sydney, pretty obviously, and buy in other markets. That wouldn't be any data-driven sort of person probably gets to that conclusion. But the risk that we see here and the risk that we're talking about is there's so many data-driven people and they're all looking at the same data. They all have the same framework. It's not like I want days on market to be rising. I want online search interest to be lower, or I want stock on market to be rising. It's the same principles. We have the same ideas. And then, if everyone has the same ideas, everyone has access to the same technology, there's not 10 people doing this now, but there's tens of thousands of people doing exactly the same thing, whether it's mums and dads at home who are educated enough to be able to do this themselves, or buyers agents that represent large amounts of clients, or a whole group of smaller buyers agents, all following the same mantra, all following the same thing. What do you think what I just said there is true to begin with?
Absolutely.
Yes. So you think that's true? Okay. Yep. That's interesting to know because I'm hypothesizing a little bit. Curtis and I have been hypothesizing, been noticing the change in where people are buying and being like, what is happening with these decision makings and the conversations that we're having? Why we've made that clear. Okay, so then one of the risks that I have here is, how do I work out fair value when, let's just say I'm buying in Adelaide, for example. Our data sets on housing finance show that investors are dominating Adelaide at the moment. So how do I work out how much a house is actually worth when, there's so many people jumping all over it and it's investors jumping all over it? Is that fair? or is that just the wrong question because fair value is what the market's willing to pay? But how do I assess that? Like, let's just say I'm buying in Townsville at the moment, like right now, and I know that there's so much demand at the moment. There's not many homes at the moment, and investors are just buying whatever's available, and owner-occupiers they are trying to get a home to. So how do I work out what it's worth in the year 2028 when the data's bad? What do you think of that?
It's a great question, and the problem is you are buying stock in some of these what they call hotspots, and it's probably hotter than hotspot at this point. It's like
volcano,
volcano level.
Let's call it that, volcano
demand,
level.
Right? It's insane things going on over there. You're buying for tomorrow's growth, though. You're sort of buying. A $500,000 house was really probably worth $450 based on market value, but because there's so much demand, people are
$500,
and there's not enough stock. The level of due diligence is probably just not there because you're like, man, I don't have the options to choose from 10 houses. There's 3 houses and there's 5,000 people looking to buy from it. So I'll go and pay $50,000, $60,000, $70,000 more.
Yeah, that's fine. Yeah.
And I think, and you're like, I'm buying for tomorrow's thing, right?
I'm resetting comparables. The next person's going to pay another $70,000 more.
Exactly right. Exactly right. So if I sort of take it back to my story, I bought in Townsville, not that long ago. Also still a very crazy market.
Yes.
I am very conscious of the fact that this is not a 20-year play for me or not a 10-year play for me, right? I understand that I'm going to sell this place in 3 years because I understand the data, right? Sell the place in 3 years, 4 years, bank that cash. I bought it for $430, for example.
Okay.
Probably sell it for $600, $650.
God,
Maybe it'll be worth $800, but that's okay. My level of risk is that I'm happy to buy in a hotspot. I will let the market do its thing. And then I'll get out.
Holy moly, Adi, you are doing exactly what I picked up the obvious. I'm like, wow, this is great opportunity where it's just like you can just buy here and then sell because someone else will take it. And what I'm seeing in Adelaide right now, I might be wrong about this. I could be 100% wrong because the economy is doing well enough. But what I'm seeing in Adelaide is when you do a deep dive into it, it's like it's past. It's past its fair value. Now it's just investors falling over themselves, but they're not looking at there's an element of it's just investors now. The data kind of says that. It's pretty resoundingly clear. There's more owner-occupier activity in Melbourne right now where house prices are moving backwards of 5% this year than Adelaide where house prices are up 15%. That's weird. That doesn't make sense. Like owner-occupier growth rate should be higher in Adelaide than Melbourne by a distance. Like the price story tells you that, but that's not happening. It's investor growth that's just through the roof. So that scares me a little bit, and I feel like that might be a data point to look at, like the turning point in data. It'd be like, maybe it's time to sell to the investor down the line. So that is so crazy, Adi. I'm hearing it from you, just like it makes it even crazier. I'm
not the only one. I've spoken to other people who've bought in these markets, right? And this is obviously I'm talking about a sample size of maybe 5 people, but I can't imagine I'm the only one thinking this.
It scares me so much.
I have heard very, very big buyers agents, who have podcasts.
What are they going to do? Yeah. Are they going to offload for their clients?
They say that. They say that very clearly in their
transaction
podcast,
fee.
right?
Wow.
Yeah. They say that in their thing. Like you don't have to buy things for, I know of a very big buyer's agent who has a very successful podcast and they talk about, why would I, you don't have to hold on to these assets for this long. It's sell it down in 3-4 years. So what does Townsville look like in 4 years when all the investors realize, damn, I've like doubled my money. My buyer's agent's now telling me to sell. There's where the influx of stock comes in. Yeah. My thing is not to time that exact point. My thing is to get out of there 1 year before that and be like,
Adi, I'm a bit afraid to say this given it's true, but do you know what the definition of, I'm going to kind of say something out loud here. When you buy an asset and you are buying it and it is rising and then you plan on selling it at some point and you have the ability to pump that asset up. Do you know what that is? What do you think that is?
What is it?
Do you know what that is? Okay, no worries. So that, if I look up the definition of Ponzi, that is the definition. That is the word that came
to my head.
That is the definition of Ponzi. Like, you can call it scheme or not, but that is the definition of Ponzi. So we have, if you are planning on selling here, then we have, this is really, really scary. We have a major problem. a major risk, which I kind of thought, because I'm like, this is what I do, but I'm not buying in Townsville. I'm not representing anyone doing that. I'm not doing it at scale. But that's so scary if people plan on doing that. What if you're large? What if you have 50 transactions and then you say, all of my investors, time to get out, time to sell, I'm buying in the next area. There's power to just a few individuals who can reshape an entire market now.
Correct.
That's nuts.
It is.
It is crazy, Adi.
You
think that's what people are going to do? They're going to sell. Like that's the broad strategy.
About what you said, right? Like if you think about, we know of buyers agents that are buying at suburb level.
Yes.
If you really think about that, so if you're buying all of Melton West, give or take, you have the ability. You've shaped that market all on your own, right? You've done 1,000 transactions in the space of 6 months. You bought 1,000 houses, each, whatever's happening with them. The market has risen as a result of that, right? Things are happening. And you're not the only one, right? There's another buyer's agent buying 500 of them, so there's, it's layers on top. And then there's, small scale buyer's agents like me buying 1 or 2 or 3, right?
Yeah. It all adds up,
right?
Especially in an area where there's 1,000 transactions.
Correct.
a year.
And suddenly there's 800 of those comes from, right? No, I tend to agree with you, man, so these people recognize the power that they hold, I think. Why wouldn't they capitalize for their, because
clients,
for their clients, right? Like the clients have done 50, 60, 70%. I'm telling you, there are podcasts out there.
But if they do that, that's where the problem kicks in.
Correct.
If they do that, I understand it. It just makes sense to do it, right?
Correct.
Like they're only representing the interest. But if they do that, there's a domino impact that impacts not their clients, maybe if they get out together at the same time, but other people who aren't their clients and everyone else there. It just creates like a little bit of a domino and it creates so much volatility. And this could be the new world that we are in where it's like technology, social media, individual influencers, podcasts like this, if that makes sense. We're just highlighting some change here from understanding behavior of investors and asking a question here, You are crystallizing a little bit of an answer to that question when you say, I'm going to sell. If that makes sense? Like, so you are using the new dynamics to your benefit. It's very clever. That's very clever.
I'm not opposed to riding that wave.
I love it, Adi.
I'm not opposed to riding
that wave too. Yeah,
why not? If I have the capital and that's kind of my risk appetite allows it, I know for a fact that I can understand the data well enough that in 2 years' time, my 430 or whatever property is going to be worth 650, 700.
Okay.
Purely because someone will pay for it. I know someone will. Okay. If I go into the market now, it's settled 3-4 months ago.
Yes.
I can probably get someone to pay 500 for it because there's not enough stock available in these markets, right?
Yes.
So you're right. There is a level of Ponzi scheme happening here, you know, and it's scary because you're not talking about.
You can't work out what the value is.
That's right. You can't. Like, well, how do you do a valuation on
what's
something
2028 value? So once all this washes out. So let's just say you buy, you sell, and then lots of people sell, and then 2 years later, what do you think this $700,000 asset is going to be worth? It's $430,000.
That's a good question.
Yeah, we got no idea.
I'm scared to say. I don't know.
Maybe be back to 430.
Maybe back to 430, man. Maybe back to 430. If there's an influx of stock, I mean that, the biggest sort of barrier to capital growth is having too much stock, right? Right now, there's not enough stock and too much demand, but the demand is from not owner occupiers at this point. It's from buyers agents buying for investors. You know? So investors buy for returns. If the returns have already been actualized, you will most likely want to bank those returns. If you bank those returns, it means the supply has come back into the market and suddenly stock on market is not 0.3 anymore. It's now 10, It's a scary world, man. So I don't know. Maybe it'll be worth less than 430.
What about one of the controls in here? So one of the controls that should happen is if all these investors go in, more rental properties appear, right? So I mean, the owner occupiers have no ability to buy, so they have to rent. Is that what happens? So shouldn't the vacancy rate start pushing up, or is it just a function of the owner occupiers now are renting? So
I think what
happens there?
Personally, what I like to do, because I wouldn't be able to know if the owner occupiers are looking to start renting, right? What I do know is that vacancy rate is a monthly dynamic change, right? It changes dynamically monthly. So if an area is starting to shoot up when it was shooting down, start thinking about what your next move is, right? And it takes a while, right? It takes a while for trends to appear, right? Trends don't appear with 2 months of data, right?
Yeah, for sure.
6 months, let it play out. Let's see what's happening in the market, right? If there's a lot of if the vacancy rates are increasing, even if they're at 0.5%, but they've been increasing for the last 12 months, start asking yourself the question, what is actually happening on the ground here? Then call a few agents, ask them, how many investors are you selling to?
Yeah.
Is it still happening at that level? This is the sort of due diligence that you want to be doing if you're buying into markets that are not Narre Warren, not Carrum Downs,
yes.
not Melton West.
Very small markets that are
very
ripe
small
for domination.
Markets.
Yes.
Correct, yeah.
And one last question to you, right?
Sure.
So I've done the data deep dive. I'll add something for the audience here. With Townsville and our North Queensland analysis, our analysis on this of its economic fundamentals are very, very strong. Correct. And actually its owner-occupier driven demand is very, very strong as well. Like it's there in the economic data. There are jobs galore there. It seems to be a freaking engine room of change that is very, very unusual for its history. 10% unemployment rates down to 2.2% at a previous point in time. So, if that continues, then housing value should be dramatically higher than the 200,000, whatever it was a few years ago. It could be 700,000, could be even more than that. Like when there's it's just worth that much now because the area has changed. So this is something that requires nuanced understanding, like a nuanced look at over time regularly, and looking at its economic fundamentals is key to that. One last question for you, Adi.
Sure.
So area with high yields, existing homes, low vacancy rates, higher market pressure, so days on market coming down, stock market coming down, vendor discounting coming down, all the market pressure indicators, high yields above 5-6%, ideally capital city if it can be, or big enough population above 100,000. These are the hallmarks of what people are looking for: low vacancy rate, ideally lowering unemployment. Now, there's only one capital city that ticks these boxes now. I'm talking about Darwin at the moment. It's an area that has 1,100 total listings usually, or 1,200 total listings. So if this happens, then change will happen. Do you agree with me there? I am saying to other people, we've done a podcast on this where I'm just saying that, no, I reckon that they're going to come. Like all the data people are going to start jumping in here. We haven't seen this so much. So there's that anecdote. We haven't seen too much Darwin activity. We have seen more than we've ever seen before, but not too much that suggests everyone's buying there. Do you think that may be next purely on the back of just investors looking for something to buy and then being like, I can fathom Mackay and Gladstone, so why not? I'll fathom Darwin.
Yes. 100% agree. I've started looking into it because what happens is, right, it's data, right? At the end of the day, it's data. Yes. Data is your first port of call.
Yes.
You use the data to narrow down the suburbs that you want to look at.
Yes.
And then you start looking at economic profiles and all that kind of stuff. At least that's how I do it.
Yes.
Let me narrow it down first, and then otherwise 15,000 suburbs, I'm never going to get off the couch. I don't know where to go.
Yep.
Darwin, just like you have, it's starting to come up a lot. The stock market is low. So if you think about the primary tools that investors and buyers agents use, when the data is pointing in the right direction, these suburbs in Darwin, which probably weren't there 5 years ago, are going to start coming higher and higher up the list.
Yes, for sure.
So as soon as it comes, and if you pride yourself in being objective and data driven, and you don't care about emotions, you don't care where you buy.
That's what they all say.
That's what they all say, right? So what was previously you buying in Mackay? What are you talking about? That's crazy
Next
talk.
up is
Townsville, it's crime capital of Australia. What are you talking about?
Yes.
Why is Darwin out of the question?
Yeah.
So in 2 years' time or 12 months' time or 6 months' time, I wouldn't be surprised if you're like an oracle here, sitting here thinking, told you.
Yeah. Darwin's going to move so much because there's 11 transactions, just one buyer's agent alone can move that entire market.
Correct.
Like that is how powerful it is, how small of a market it is, how few listings it has. They can take off 100 listings. That's 10% of all total stock available, and that will drive the next leg of house prices. The one thing that I forgot to say is the market cycle timing. Part of the reason why Melbourne's attractive, Darwin has its same price today as it was 10 years ago, roughly. And our early analysis of the data suggests the investors are starting to come with a 30% increase in investor financing in the last 90 days. But I think it could be 300% in 900 days, if that makes sense, over the next couple of years. So we could be at the early point of this. Adi, this could have been one of the most informative, one of the most insightful, one of the most controversial podcasts that I've ever been involved in, Adi, because you are crystallizing some potential thoughts. You are just, you're owning it and you're just saying, this is true. This is happening. Let's be real. Let's talk about it. Let's have conversations. Let's just be honest about what's actually happening for the purposes of educating and for the purposes of people going in eyes wide open. This is a risk. You have heard from someone who is a whiz with this data himself, applies it for himself, and he is talking and has bought in these locations himself, and is openly saying that I plan on buying here, I plan on selling here because a lot of people are going to buy and sell here, and I'm just riding the wave of people buying in over and over again. I'm going to make money through the process. Great opportunistic investing, Adi. I think that's really, really smart. But for those at home, be aware of this, eyes wide open. This is a risk that exists. And when you're in a shoe like mine, where you represent investors from all over the country, hundreds of them, if not thousands of them, doing, over 60, 70 transactions every single month, nearly 1,000 in 2024 alone, you hear this, you see it, you understand so many different stories from other people, and you start putting it together and being like, hang on, I'm kind of a centerpiece of information. Finance is what they all need, and it's a centerpiece of information. So you start getting this anecdote. It is a little bit of a risk. So buyers at home, beware. This is happening in the marketplace. I called it a major risk or a major warning in a previous one. Now I'm actually saying that it's real, and Adi is the source of information that I'm getting here for that. So thank you so much, Adi. Really appreciate it. And if you've enjoyed this, go in the show notes, hit up Adi. I'm going to put his contact details here. He's a buyer's agent whiz that will do you really well if you have him on your team. Thanks, everyone. For those still listening, please do me a favor, hit that subscribe button below and that like button. It would really help grow this channel. Appreciate you all. Till next time.